Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with the European Session Outlook, and we'll start with the North American markets. We have the Bank of Canada CPI core month-on-month, year-on-year, both as expected at 0.3 and 2.1%. The normal CPI month-on-month, year-on-year was 0.1% was expected, and 1.5% as well. The housing starts month-on-month in the U.S. were 14,000 better than expected, and the building permits 12,000 worse than expected. U.S. stocks closed down Friday, finishing out the week lower as investors continue to fret over the possibility that the UK may leave the EU, on top of lingering concerns about the Fed's reluctance to raise interest rates. The Dow Jones is 20 points down Friday, Nasdaq 77 points down. These are big movements. The Dixie is down to 93.95 from 94.49. The USD CAD is sideways to the downside. USD Swiss franc ended 60 pips down, and USD JPY 65 pips down on Friday. There's actually no events for today. However, for the week, we will have a very important event tomorrow and Wednesday. Yellen will be having a testimony, and we'll see what are her views on the economy and the Brexit in total. Right on to the EU markets. Draghi had a speech on Friday. He was hawkish and said that the central bank has the wealth to keep the euro up. He said, "We will do whatever it takes to preserve the euro, and believe me, it will be enough." This likely will include massive bond purchases. The producer price index of Germany came out already this morning, and the results were month-on-month 0.3% higher than previous at 0.4%, and for the year-on-year, it was 0.4% less than previous at negative 2.7%. The Euro-USD opened with a 65 pip gap up today. The euro will most likely follow the pound, depending on the outcome of Brexit this week. On Wednesday, we will have a non-monetary policy ECB meeting and the targeted LTRO. All right, on to the most important markets for this week, the UK markets. We had a Tier 1 event Friday, consumer inflation expectation, 0.2% better than expected at 2%. The sterling surged in the early Asian session, and polls are now favoring the Remain campaign after the death of Jo Cox last week. In a poll conducted on Friday, the Remain campaign has a 3% lead against Leave campaign. The gains added to the upward momentum of the sterling's performance from last week. The FTSE 100 closed on a dodgy at 59.92. On Friday, the 10-year gilt yields closed at 1.48% on Friday. The GBP/USD 60 pips up Friday, 165 pips range opened with a 120 pips gap and added 240 pips until today. GBP/JPY 82 pips down on Friday, 180 pips range opened with a 180 pips gap and added 290 pips already today. GBP/AUD 57 pips up on Friday, 185 pips range, opened with a 62 pips gap and added 205 pips until today. Again, the Canadian dollar, it opened with a 85 pips gap, adding 215 pips until today. Again, the Australian dollar, the gap was 108 pips and added 180 pips till today. Again, the Swiss franc, the gap was 110 pips. Actually, the gap was 55 pips, and it added 185 pips until today. So, the most important event will be the Brexit on Thursday. This will be the main driver of the pound. Also, for the week, we have public sector net borrowing, GSK consumer confidence, right move house price index month-on-month and year-on-year. CBI industrial trends, survey orders, CBI industrial trends survey realized, BBA awarded, and mortgage approvals. So that was all for the UK. On to the Asian and Pacific markets. We had on Friday JPY imports year-on-year 9.5% more than previous and negative 13.8. and exports 1.1% better than expected, 1.2% worse than previous. The Japanese merchandise trade balance total 0.7 billion yen, worse than expected. The JPI adjusted merchandise trade balance 156.8 billion yen, worse than previous, at 269.8 billion yen. Emerging market assets rose for a second day as the momentum in the Brexit campaign looked to be shifting to the Remain campaign before the vote on Thursday. Japanese exports fell for an eighth consecutive month in May as shipments to China, the US, and Europe slumped, undermining Prime Minister Shinzo Abe's efforts to revive the economy. The Nikkei was 94 points down on Friday, opened on Sunday with 240 points bullish gap, and 150 up since then. Overnight, we'll be having big Japan monetary policy meeting minutes. And on Thursday, the Japanese leading economic index and confidence index will be the events we'll be looking for. In Australia, we will also be waiting for the meeting minutes from the World Bank of Australia on Thursday. All right, on to the last section for the day, the commodities. The Baker Hughes oil rig count increased by 9 last week to 337, the third straight weekly rise. The gold prices edged lower on Friday, but held near the prior session's 22-month peak as trading remained volatile before the Brexit vote this Thursday. Oil futures rose for the first time in 7 sessions on Friday, bouncing off 4-week lows as a weaker U.S. dollar lent support to the commodity and as concerns over a potential UK exit from the EU. Crude oil rose in Asia on Monday despite weak trade data from Japan, with imports posting a 17 straight drop. Gold had a range of $23 at $12.82 now. Silver had a range of 29 cents at $17.33. Crude had a $2 range up to $48.42. Natural gas is trading at 2.64 at the moment with a range of 9 cents. That was all for today. Thank you for your attention, and I will see you next week. Goodbye.